Hi, this is Oli Hille on the 5th of July 2013, and I've got in front of me a monthly chart of GBP USD. Now I'm excited about this chart because we have a very big channel or a very big range, and in fact, because this is the monthly chart, this range, which let's say starts, well, obviously I've indicated the range by the two horizontal lines I've drawn, but let's say it starts down in here. Give me some cursor information. So it started down here in May 2009, so we've been in this range for 4.5 years. Now okay, it's a big range, it's about 20 big figures, 1.67 to 1.47, so that's 2,000 points. But nevertheless, in terms of the chart, it's a very, very long range, and as I've said to you before, and I'll go and talk about Aussie USD in a minute, but when you've got a price that's been in a range for a long period of time, the longer it's been in the range, the stronger the breakout. So I'm expecting a breakout. Well, there will be a breakout obviously at some stage, and it looks to me very much like the breakout is going to be to the downside, and I'll explain why that is in a minute. And if that happens, then I want to be participating because, as I said in an earlier video, Aussie USD, it's very likely that the breakout will be at least the size, around the size of the range, which, as I said before, is almost 2,000 points. So that will take us down. So let's say this is pretty much 148, isn't it? So down to 128 and possibly even further. So let me talk about why I think it's going to break out to the downside. Let's start from this point here and call this our high, which of course it is, back in 2007. Then here we've got a lower high. Here we've got another lower high, another lower high, another lower high, another, probably an equal high actually, might be slightly above, an equal high, and this rejection candle here looks to me like forming a lower high. Now, to be certain, we need to wait for the break of this candle here. So obviously the low there touches pretty much bang on the low. In fact, the low is 1.4829. Obviously this is the monthly chart, so we're talking about very big ranges, so the touch of the candle is not actually 148 even, it's 148.299, call it 148.30. So to be certain, we're waiting for the break of that candle there. If we do break that candle, these two are outliers in terms of the range, or you could decide to go from this candle here, in which case you're looking at a range from mid-2010 to mid-2013, whichever way you want to do it. Once we've broken out of this range on the downside, I'm expecting it to continue. Okay, also while we're on this chart, let's have a look at something that happened back here, and we have a nice range here which was almost 2 years, and I've drawn a box around it. Sometimes drawing a box helps to visualize exactly what's going on, and price is certainly contained within that box until it breaks out very powerfully. Obviously that's less than 2 years, breaks out very powerfully, and obviously that's a massive move from the high of that candle 198 down into the lows 135. So that's what's that, 53, 40, 60, 63, 6,300 points. So a massive move. Okay, so let's just go and have a look at Aussie USD, because this is the example I gave a few weeks ago. In fact, I talked about Aussie USD in one of my videos when we were up in here and before we'd made the break, and I said once we make a break, whether it's up or down, we expect the break to be strong and go at least as far in terms of the range, and exactly, that has happened exactly. So that's I won't take your time up by calculating that. You can calculate it. That's roughly the range there, and sure enough, what happened, we came down to support and resistance here, or support rather. We did spend a bit of time around the support resistance level. We came down, we came back up and tested support resistance, as often happens, and then we fell away again. And now you'd have to say probably there's more support resistance around this level here. One, because we've had a touch, we've come up, we've gone through it, we've come back up to support resistance, and right now we're rejecting it again. So again, our expectation is, having hit resistance there, it will continue to fall. But of course, the time to get this trade was at the breakout, and it's done everything we expected to do and more. Now, I traded this relatively poorly. I mean, I have made a good amount of money trading this, but what I did, and this is a mistake I'm not going to make with GBP USD, the mistake that I made is that I took a shorter term view and traded in and out of the position. And so if there was a piece of news that was positive for Aussie, I would cut the position. I'd wait for an opportunity to re-enter. If I thought we were going into a bullish week for stocks, I would cut my position, etc. And what I should have done is taken, well, I did take the break. What I should have done is taken the break and not done anything with the position, just simply left it. And one of the things that I do when I take a short position is I leave it short until there is it goes to a new 10-day high. And if you go down and take this break, there is never a point in this, even these retracements, where it goes to a new 10-day high. It sits, I think one of them gets to an 8-day high, but it always sits under the 10-day high. And had I taken that approach, I would still be short now, and I was short up until last weekend. And I took my position off because I knew this week was likely to be a bullish week, and I put a video out on that already. But chopping in and out, one, it's caused me to pay more brokerage. Two, it's caused me to miss moves when I thought there would be retracement and there wasn't, and I've had to join lower, etc. So it's I've made only a portion of what I would have made if I'd simply taken one position and ridden it down rather than chopping in and out so many times. So I'm not going to make that mistake with GBP USD. There you are, you've got it on record. I don't need to take a big position. I can take a relatively small position because I have to have a reasonably wide stop, because as I said, I'm just going to leave it. I'm not going to be looking at short-term charts and deciding when to chop in and chop out. I'm going to be leaving it. I'm going to be expecting that when it does break out down past 148, there's an expectation it will come back up at some stage and test the break. So I need to make sure my stop is well above 148 for some period of time. And then, if it plays out the way I expect it to, then there's no reason why I can't ride this down to 128 and below. In fact, if we go right back, right back into the 1980s, the low there was 1.036. So obviously that's an awful long way to go. Let's see if we can draw a line on that. And I'm certainly not calling for that. But if it breaks out of this range, and actually I hadn't noticed this before, but we've got quite a bit of support right at that level there. Here, obviously this is a monthly, but once again, you can see here, it's broken down below, had a go at getting up, failed, come down, come up, again, tested the support resistance line from the underside, gone back up again. Oh, didn't mean to draw that line in. It's just going to confuse me. So this is a very big level, this 148 level, and I do expect it to be broken from the downside. put a alarm on your calendar. No doubt we'll send out more videos closer to the time as and when it breaks that. Of course, if it doesn't break it, then there's no trade, and I guess, you know, there is a possibility it'll go up and break to the upside, but right now that looks very unlikely. As I said, we've got a nice series of lower lows. Also, as I also said in my recent email, we've got a catalyst for why pound is likely to fall against the US dollar, and the euro as well for that matter, in that they both, the UK and the Eurozone, have come out publicly and said that they expect to keep their interest rates low for an extended period of time. And the US has come out, the US Fed has come out publicly and said they expect the low interest rate environment to stop within the next 12 months. So they've got very different policies. Obviously, currencies are driven by interest rates because, as I may have mentioned, I can't remember if I mentioned this in the video, but this is a key point, is that the reason asset values move up and down in the world, there's only one reason for that. And that is because investors are looking for the highest return for the least risk. And so when you get a currency having an increase in interest rates and another currency saying they are either going to keep their interest rates low or even lower them possibly, then you have a situation where people take their money from those low yielding currencies and move them in anticipation of interest rate rises, and that fund flow continues, which is incidentally why Euro USD has fallen, because Aussie USD has fallen, because Aussie have been cutting and may even continue to cut interest rates, and there's an expectation that the US will increase interest rates. And of course, Aussie got up to this level. Let's have a look at the monthly chart for Aussie. The reason why Aussie got up to these insane levels, in hindsight it certainly looks insane, because if you take a long-term view, that's as far as it's going to let us go back, 1988, you know, the average price is probably somewhere here between 70 and 80. So it's got up to these historic highs because the Australia had very high interest rates, much higher than US, and so people were using the US as a funding currency, borrow low, buy high, and get the yield. Of course, there's other things going on as well, but that's one of the key reasons why currencies move. It's the underlying interest rate or expectation of the interest rate. So I hope that's been helpful. I'm eagerly anticipating a break in this chart. I'm also interested to see, I've talked about big round numbers before. Obviously 1.5000 is a very big round number for this pair. Big round numbers are support and resistance, but they also act as a magnet. So I'm expecting price to drop to 150,000 in the next few days. And let's see if it can break that psychological level first and go on down and break 148. Hope that's helpful. Do your own research, do your own back testing, try and find your own channels or your own ranges. They can be on much shorter time frames than monthly. You can certainly find them on weekly, daily, 8 hourly, 4 hourly. You can even find them on an hourly chart, although of course if you're trading off an hourly chart, you've got to be aware that prices can move in and out of ranges much more quickly on small amounts of news, but that's not the case with a monthly chart. One piece of news is not going to take you out of a monthly range and then pop you back in again. Once the break's on, it's very likely that break is going to give us a very good trading opportunity. Happy trading, talk soon.